Hi everyone. Today let's talk about what Fed officials are saying about rising bond yields. Then we'll take a look at the data. Then we'll get into the charts. Then we'll take a look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So they say here the Fed might not have to hike so much because bond yields are going higher on their own. The 10-year yield hitting 52-week highs at 4.8%, and it's climbed 0.909% so far in 2023. And the current benchmark is between 5.25 and 5.5, so almost all the way up to that benchmark for the next 10 years already. They also mention if we see a cooling labor market, that could help with inflation. We did not see that in the JOLTS report, and that's why the markets reacted so poorly to that. But we did see it in the ADP non-farms, which were much weaker than expectations. The non-farms tomorrow are absolutely going to have an impact. We also get the unemployment rate tomorrow, which could be interesting. All of these things are starting to swirl together, and it does seem like unemployment is starting to play a bigger role here recently. And they say here, financial conditions have tightened significantly in the last 90 days, but in August we also saw a re-acceleration of CPI, which was a little bit concerning. If that becomes a trend, that could absolutely push markets lower, but we haven't seen the continuation quite yet. They mention here that the 10-year Treasury has risen 36 basis points, which is the equivalent to one rate hike, so the open market doing things for the Fed on their behalf. And we do forget this sometimes, that the open market does actually move the markets on its own. It's not just the Fed raising rates. They do mention here 2% is still a long ways away, echoing the things that the Fed has been saying. There's also long and variable lags that the Fed has been watching, and they've said that multiple times before, so you do have to factor that in. And lastly here they say many components of inflation have come down as expected, but the non-housing core services remains inflated, often called the super core of inflation as they mention here, can be relatively sticky and remains far above pre-pandemic levels, which could be leading the Fed to continue to maintain that very hawkish tone in my opinion. Moving over to the economic calendar, we got initial jobless claims slightly better than expectations. Previous numbers were adjusted up slightly. Nothing crazy there today. Looking at tomorrow, this is a big one. We do have non-farms at 8:30, as well as the unemployment rate at 8:30. Those are the two biggest ones, and we'll see that in the pre-market tomorrow. And that's likely to drive the rest of the price action for the rest of the day, in my opinion. Moving over to max pain for tomorrow, you can see tons and tons of puts still at 420. Max pain now at 426. Just barely above this spike. That would be about 0.5% of up move right into that range for that 426 level. Options right at 1 million. Put call ratio continues to come down throughout the week, which is interesting, but 426 makes sense. You could argue 423 also makes sense. Should be a pretty tight range for tomorrow in my opinion. Moving over to the charts, S&Ps on the hourly chart fell in the pre-market, hit my level at 421.85, wicked that level and bounced right off it. Talked about that level yesterday as the low level. Didn't quite get up to my upper level at 425.82. You can see we stopped at the pre-market highs and then fell a little bit after hours. Daily chart, you can see we threw that wick to the lows, finished basically unchanged, 0.13% to the downside. Momentum continuing to look a little bit bullish. Given a closer look at that structure, you can see this is still a bullish structure. We just have a short-term downtrend here from mid-September to current levels, but we really have to have that 200 SMA hold. Again, sitting at that 420.58 level. Super critical. Just below that, I have trend right at 420. Again, momentum continuing to tick towards bullish. Seems like we're consolidating at support, waiting for that data in tomorrow's session. Moving over to the NASDAQ here on the hourly and the daily. Similar thesis, big up wick to that 200 SMA on the hourly chart. Big move down to trend. Touched that level, rallied back up to the 200, broke down again from that level. Clearly we need to get above that 200 if we're going to have any hope of a move to the upside. But this still looks clean to me. It is a higher low on the hourly chart. Momentum, not really doing much of anything. Daily momentum, however, definitely finding some strength. You can see we've been in this downward channel for a little bit now, but we are holding at this trend line, which is nice. We touched it once again here today, found some strength and rallied up. Ended up down 0.36% on the day, so about 1/3%. But coming off of this, it does look clean. And if this momentum continues tomorrow, if not the next trading day, we should see bullish momentum on the NASDAQ coming back, which should be a nice little signal to the upside in my opinion. In terms of levels, we are above 358.04. Next upside level for me is 361.58. Moving over to the Russell and the Dow. Russell did basically nothing, up 0.08%, touched that level at 170.35, bounced a little bit, it's down a little bit after hours. Basically no change here. Momentum did step slightly towards bullish, RSI ticking up slightly as well, but interesting level, 170.35. If this ends up holding, we could look for a nice bounce from that level. Dow, again, similar thesis, continues to hold that 329.40 level. Next one to the upside is 335.91. And if we get into that 21 EMA for both of these, that would be a pretty substantial move to the upside if this support holds. Moving over to Apple and Tesla. Apple rallied up right to that short-term trend line that we talked about yesterday, held at the 21 EMA. Really, at this point, you want to see a big move higher, pull back into that same zone, and then a continuation if it's going to happen. We did tick into bullish momentum. We had it yesterday a little bit, but it's much better here today. Tesla ended up dojing on the day. Similarly, slightly bullish momentum. We have some interesting levels at 264.68, and then you have trend just behind that at 267. Need to get above both of those levels. If we can do it though, we're looking at 280.06 as the next resistance, or right at these previous highs, right in that 278 area. Again, momentum on both of these does look pretty clean to the upside. Moving over to Microsoft and NVDA. Microsoft up 0.13%, NVIDIA up big 1.47% at a critical level here going into tomorrow's session, 447.13. Been watching that level for a while. We rallied up from 420.50 right to that level. We've been here for a minute. You also have the 55 EMA sitting at 448.96. Touch that level again here today after touching it Monday and Tuesday and then breaking down a little bit. Really needs to get above this level and hold and rally from there if it's going to do it. Similarly, Microsoft looks pretty clean from this 315 level. Obviously, it has a little bit of short-term resistance just above it. Next level for me at 330. Moving over to staples and discretionary. Staples dumpster fire here today. This is probably due to the news on Clorox, which is definitely going to be an issue here for staples. Could also argue that it's technical coming off of that 21 EMA. Bearish momentum, big volume, looks super weak here. Still watching that 66.27 level. Discretionaries could not get the continuation from that level that we were watching yesterday. You can see that highly traded zone right there. Big momentum, big volume on the day, which is interesting. On the bull candle after the slight pullback. So really, if this holds here tomorrow and rallies on a continuation, that could be a nice indicator of some potential upside here. Higher low setup, big volume, bullish momentum. Overall, some pretty good indicators. Obviously, this is still a downtrend. You have all the longer term EMAs and SMAs sitting well above current prices, but short term kind of looks like a double bottom with a slightly higher low setting up, and you need to take out that midpoint looking for a bigger pullback up to that 166.78 area. Moving over to transports here for a moment. I don't talk about transports in every video, but it is interesting here. You can see some clear divergence happening with the low on RSI on Tuesday the 26th. And that low price was sitting at 230. Currently, we're at 229.49, so clearly a lower price on the close. But the RSI read for today is sitting at 30.73, so higher RSI read with lower prices. This move to the downside clearly getting some exhaustion wicks. At an interesting level of support, you can see these previous highs going back to mid-May and mid-April. So overall, interesting support, clearly an area of high volume, with a pretty extended down move, indicating that we could see a nice little upswing from this level. Moving over to breadth on the 50 and the 200-day average. 50-day average got a nice confirmation candle, momentum continuing to tick towards bullish, coming off of that 1050 level. We did get above it and close. 200-day average, I might end up moving this level from 36.23 down just a little bit to these wicks. We continue to throw wicks into this same area and then find support. We did get an RSI low here on 3 October. And now we're getting a little bit higher levels on RSI. Not clear divergence yet. Really, I want to see it get above that 36 level. hold and then rally up to that 43. That would be a nice little confirmation. And if we start to see bigger moves here, this could be a pretty substantial move, just like we saw here basically throughout June and July. Moving over to the yields boogeyman that everyone continues to talk about, 2-year yield falling a little bit more here today. Bearish momentum, bearish RSI. We haven't seen bearish RSI in a little bit. We did see it just briefly here at the end of August. This kind of looks more like a topping pattern. You had a clear high, slightly lower high, rallied up. Could argue maybe double top right there, breaking back down. Got a new low close below that midpoint, kind of. We're clearly at the highs from the middle of September. You want to see it get through there as well as the 55 EMA if we're going to see a bigger pullback. Not happening quite yet, but possible. 10-year yield, saw that topping tail yesterday, got a doji here today. Really, you want to see a bigger confirmation down, in my opinion. Momentum continuing to step down slightly. You can see just how overbought we were. We got an RSI read of 78.25 on Tuesday, and that was the high for RSI. And realistically, you should get at least a pullback to the 21 EMA, sitting at nearly 4.5%. Moving over to the dollar on the hour and the daily. Clear structural break here on the hourly chart. Rallied up to that 55 EMA. Couldn't quite get there, broke down through a wick back to that 106.83 level, broke down once again below all the EMAs and SMAs on the hourly chart, bearish momentum, bearish RSI. You like to see it. That's 2 days in a row of pretty big bearish candles. Obviously bullish structure on the longer time frame, so you really have to see quite a bit more confirmation, but we are very close to bearish momentum. Clear breakdown of the SMA on RSI. Interesting price action here at a very interesting point for prices. This could be like a left shoulder head, right shoulder potentially. And then if we get a clear breakdown from that neckline, that could be interesting. Doesn't mean that it's going to happen all at one time, but it is something to start watching here on the dollar. A dollar pullback should be bullish for equities. Moving over to bonds, you can see we did get a slight step up here today on J&K. We had an inside candle yesterday on both of these charts. J&K showing a little bit of bullishness. You can see tons and tons of volume for some reason yesterday. Didn't really go anywhere. Could be some profit taking from this previous level. Big move down, profit take, look for at least a little bit of a pullback. That could be interesting. Really, you need to see it get back above 89. That is a critical level. TLT, yes, we got a bullish candle yesterday. Yes, we got a bearish candle today. Obviously, this is a dumpster fire here recently. But like we saw in the 10-year, you might look for a little bit of a pullback. Certainly possible. And if we see bonds rally a little bit, we might actually see equities rally with them. Moving over to the volatility indices, MOVE index rallied just slightly, not super convincing. We're still below this high from 21 August. Again, it does seem like we're seeing a little bit of reversal in yields, just slightly. Doesn't mean that it's going to continue that way, but it is interesting. VIX through a wick to the upside, continues to break down a little bit here today. Momentum definitely fading at this point. That's 2 days in a row. We saw a similar move the last time we got into this range. You can see that move lower that we got. The question is this going to break down below the 9 EMA tomorrow? Certainly possible. Obviously, all of that is going to depend on the non-farm payrolls as well as the unemployment data. Moving over to my accounts, you can see I made a few bucks on the day, which is good considering the NASDAQ was down 1%. Basically, I did not need to change my positions in order to make that money. I did play around here and there throughout the day, ended up with just a few bucks on the day, which is good. In terms of positions for tomorrow, you can see I just have my core position going into the unemployment data. Says I have a loss of $132 on those calls. Not really true here. I got a $2 credit on that at $357.50. So my max profit there is going to be $359.50. We're about $1 below that. So realistically, I should have about another $1 of upside by tomorrow's close. We'll see how that plays out. Again, obviously it's going to depend on the data, but right now I'm basically neutral on the markets, leaning towards that bullish side once the data comes out. Let me know down in the comment section what you think of yields going higher. Have we kind of topped out in this region after the really strong rally that we've had recently? Or is this just a momentary pullback and we're going to get a continuation and a further breakdown? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.